Hey everybody, I'm Bry, the retirement guy. We're talking Bitcoin in retirement. Crypto is the talk of the town. What is it? By the end of this, you'll see the surprising benefits, the cons, and how it might fit into your retirement plan. Let's take a look. Bitcoin is the first decentralized digital currency, and that was launched, believe it or not, back in 2009. It runs on a peer-to-peer network called the blockchain, kind of like a digital ledger maintained by thousands of computers around the globe, and nobody is in charge. Every transaction gets recorded, verified through complex math, making it secure, yet it's still highly volatile and speculative. Now, why would anyone consider Bitcoin in retirement? Well, one, diversification. Bonds just aren't cutting it for most people. Bitcoin often moves differently than stocks and bonds. That kind of non-correlation can help risk. High return potential is another reason to consider. Over the last decade, Bitcoin has delivered eye-popping returns, ridiculous, far exceeding the traditional markets. From 2014 to 2025, it's averaged an annual return of around 630% compared to 15% for stocks. Now, I don't think that's going to continue, but nobody has the crystal ball. You don't need a financial institution like a bank, just an exchange account or a wallet. Bitcoin gives you a sense of financial sovereignty, but there is a but. It's got extreme roller coaster rides and volatility, ups and downs. You could see massive swings, way more than you're used to with traditional investments. Not ideal for a retiree. We have regulatory and tax concerns. Bitcoin can't always live in a tax advantaged account or retirement account, and rules are changing pretty fast. That makes trusting it fairly tricky. A lot of the issues we're seeing around security come from exchanges being hacked or people getting their wallets stolen, and the crypto world isn't always safe. You have to know what you're doing to avoid losing access to your funds. If you're still curious and want to poke around a little, here's how you might want to get started safely and in a prudent way. One, choose a reputable platform like the big ones, Coinbase, Kraken, Binance, or even peer-to-peer trading. Set up an account, verify your identity, link your bank or card, and buy a small amount you can afford. Move it to a strong wallet or reputable software, and always use two-factor authentication. A more trustworthy way is consider buying an index fund or an ETF in a traditional brokerage account where you don't have to worry about all that other stuff. Should you have it in your retirement portfolio? Should you not? Maybe if you're younger, willing to accept risk, and want a tiny speculative slice. Probably not if you're close to or in retirement and need stability, or you just don't have enough to have a portion of your investments in an alternative portfolio. If you want to add a little crypto, be intentional, start small, and be crystal clear about the expectations. Do us a favor, hit the button, subscribe. Let us know in the comments if you're curious about crypto, if you've started investing, and what your experience has been. I know others are counting on hearing your story. Have an awesome day. We look forward to talking soon.